The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 18th. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Right now it's just fine. The lines are open, 877-927-6648. And look, if you can't dial in, you can let your fingers do the walking. All you need to do is send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question and fire away. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow off 95 points, trading at 26,020. S&P is off 2798. NASDAQ 100 up 4 points at 6814. Russell 2000 down 6, trading out at 1580. Semis are up about 0.4% or 5 buckaroonies. New York Stock Exchange off $30. We'll take a look at that today. NASDAQ Composite up just slightly. Tranny's up just slightly. Spot Volatility Index up more than just slightly, about 2%. That's 22 cents. Gold is off about $10. Silver down 17 cents. Leading the charge here to the upside is CoStar Group. That's dollar-wise $14 and change. You've got, I don't know how you say this, BEIGE. I know that spells beige. Beige-nay. Limited, that's up $14. M&T Bank Corp up about 4%. Avexis up $6. Wyndham Worldwide up 6 or 5.5%. To the downside, it is the price line off $14 and change. Albemarle Corp down about 10. Boeing off 9. That's what's putting a hankering inside of the Dow to the downside, off 2.5%. Google is off $7. Of course, I want to look at what you want to look at. No request at this moment. So let's just go look at the general markets, what it is that we are focused on and looking at. If we take a look at, so we've got a little post here and a little ping inside the den. If I take a look at the ES Mini, kind of a cool chart out here. The NQ, the same thing. But you and I just take a look at these patterns repeating and repeating and repeating, and that's why we pay attention to them. And when we take a look at the ES Mini from the low here, back on 2 days ago at about 3 o'clock in the afternoon, that's January 16th, you just simply start doing your wave count. You do your wave count to the upside. Where does price stop? It gets right up to that letter G, seventh wave. That's Stevie Wonder singing in the key of G. Market has pulled back since then. If we just start doing our little wave count to the downside, where are we at? Well, we're not at a G just yet. Maybe we're going to get one more flush to the downside to get that G. But the question is, why did price stop where it did? And that's the interesting thing out here. I still can't believe that I stumbled upon this, but I've stumbled into a lot of things in life, and many of them have been PDG. Pretty darn good. If we take a look at where the ES Mini stopped, right at the 27.93.75 point, that is at the exact price point, and I do mean exact to the T, price point from when the moon was furthest from the Earth just a few days ago. I believe that was on Monday sometime. How does that act as support or resistance when it's not even close to a swing point out there? I don't know. There's something. I would say there's something in those stars. Is the moon a star, technically? If and I apologize for not knowing. I am going to be up at the top of the summit on Mauna Kea in a couple of weeks. So I will be doing some stargazing for sure. But I'm told you've got to bring your mittens because it's like about 30 degrees up there. Okay, so that's what's going on inside the ES Mini. Maybe it's going to get to a seventh wave move to the downside. We would anticipate that apogee lunar phase would actually go ahead and hold as support. If it doesn't hold as support, where in the Sam heck is it that the ES Mini could trade to? Well, it could always go down and touch Stevie's red line. That Stevie's red line number is 2782 and change right now. This market will remain bullish until price gets below that. When it gets below that, then knock on my door and let's go ahead and do a checkup on the ES Mini to try to figure out just what exactly does it mean. But as we speak right now, it is nothing but the bulls that are in charge of this market. If we take a look at the, what do we want to take a look at? The Dow. Let's take a look at the Dow. What's it doing? Because I haven't looked. So let's go check in on it. Let's take it now. This did not make a seventh wave, but that's okay. This went on and made a high out here. Then we're going to do the count to the downside on it. It's really just come back on a 30-minute basis right to one of the Tommy DeMark support levels, right around the 25,930-ish area. But right now, what you would anticipate that Stevie's red line, priced at 26,049, and price are going to catch up to each other. Price right now, 26,023. That's where it will release the most amount of information, is when those two meet. Are they kissing cousins, and they're going to reject each other? And price is going to go to the downside? And if it does, then we've got a further run lower inside of the Dow. Or is it going to be they're going to kiss and make up and head to the upside out there? Any close above Stevie's red line says the Dow ready to run higher. It's 14,000 plus feet up there, Danny, at the top of Mauna Kea. In order to get up there, you've got to rent a, if you can find it, which I did, a pretty decent heavy-duty 4x4 because you've got gravel roads. Of course, there's no lights up there. You get up there during the day. That is for sure, because then you get to see the sunset from the highest height. It's actually higher than Mount Everest if you go from the bottom of the, so I'm told, what do I know? 2x4? No 2x4, but the 4x4. I thought about bringing some oxygen. We'll just take our easy time on the way up there. But we'll be up there before the sun sets, just simply so we can crack a bottle of bubbly. And really probably more just a beautiful Cabernet. Maybe even a bottle of sake. You never know. Could be both. And watch the sunset and then do some stargazing. When we get back from this break, we'll do some more stargazing. We'll go take a look at whatever market, whatever indice, whatever ETF, whatever stock, whatever currency, whatever it is that you want to look at. I'll check my email, steve@tfnn.com. You can send me pings inside the Tiger's Den. Of course, you can call us, 877-927-6648. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So the first request is from Ruby. She wants to take a look at the silver. And we take a look at the silver, you know, where my eyes focus on is the daily and the weekly charts at the moment. And the reason is because we've got really a nice set of profiles out here. Now, we know that resistance for silver was $17.32 to $17.48. And the reason we know that is because it's the top of the TAS profiles, the daily and the weekly, respectively. The daily box, which is panel number 2 from the right. Here, I'll just kind of blow up the chart a bit. And so now we're only looking at the daily time frame. And we can see that the structure of that box is bearish. So what it means is that if silver can close above 1732, that would be a very bullish event out here. And if it can't, then the sellers could explore price all the way down to the 1651 level. We're trading at 1697. Doesn't mean that they will be able to, but if they do, it should be an anticipated outcome. Whereas closed above 1732 would be very bullish. If we take a look at the weekly chart, what we can see is it has a bullish structured box. It's a small box out here, but that's okay. We'll take small boxes. Now, support here is at 1674. So this would suggest that sellers will not get price all the way down to the bottom of the daily box, and that 1674 would act as support. Well, if we go take a look at silver in reference to Stevie's red line as we finish this off, we're going to see that that's priced out at 1704. In order for silver to not push down to those lower levels you and I looked at, you really want to see silver close above Stevie's red line, 1704. Does that mean it's the top? That's it? Sayonara, adios? No, but it's not the type of bullish condition, sunny skies, bring out the sunglasses that you want. It says, hey, that further retracement. So we've identified the levels of support. Again, those being potentially 1651, or 1674. I would be more of the 1674 variety. I hope that helps you out there, Ruby, with the silver contract. We also had a question about taking a look at Adobe. Let's go take a look at Adobe. ADBE is the ticker symbol. And we're going to start off taking a look at the 3 time frame charts out here for Adobe. You've got the daily on the left. You've got the weekly in the center and the monthly on the right-hand side. The very first thing you or I do, we take a look at that set of charts. We just simply take a look at where is price trading at in relationship to its TAS market profiles. Daily above the top of the box, weekly above the top of the box, and quite frankly, it just formed a monthly profile this month, the month of January, and it formed below price. That is a very bullish pattern. When you see that happen, you don't see it happen too often, but I can tell you it is the pattern that's in place now. If you're wondering where Adobe is headed to, well, it's first confirmed conservative on a weekly basis. A to B equals CD. The upside says 203.84. You're at 195.83. If you're in this to win this, and win this means it's not going to stop there. It's not stopping at 203.84. It's headed to 220.13, maybe even 240.85. So I would say the way that events have unfolded here, the monthly time frame with price being above the top of the box, a weekly confirmed A to B equals CD. Adobe wants higher price. I hope that helps you out. I don't recall who asked, but it was from the Tiger's Den. There are some folks who let their fingers do the walking, so let's go take a look at what they're requesting. We've got one here from KJ. And not KJ Choi, KJF in here. We won't reveal the name. Hey, Steve, I got into MyGen today, MYGN. Let's go ahead and pull this up here. MYGN is the ticker symbol. And then we'll continue reading MYGN. You got the daily, the weekly, and the monthly charts out here. I am looking for a move to 43. What do you think? Well, let's go take a look at it. First of all, same type of scenario. We like that scenario, and that is where price is above a daily profile, a weekly profile, which is 37.30. See if it closes above that this week, and above the monthly profile. Here's another example of a monthly profile that just formed. However, price was in essence inside the box, but you're over the top of it, which is 35.39. You're looking for 43. I'm saying, hey, 46 has all kinds of legs out there. No reason for this to not head towards its next swing point. And from a monthly perspective, is this going to pass the October 1st high of 37.30, which has 16.9 million shares? You've done 7.2 already. Sounds to me like we have a candidate for a large A to B equals CD to the upside. Quite frankly, it would be a large potential break of a consolidation pattern, but that's not going to happen until price closes over 44.90. You're looking at 43. Let's go take a look at the weekly time frame chart. Do we have a candidate for an A to B equals CD to the upside? If we take a look at the swing point, it's October 9th, 2017. You remember those days, old friends. 3.1 million shares. You're up right now with 2.6 million shares on a shortened week out here. Ring the bell is what I say. Ding, ding, ding. Because you now have a confirmed A to B equals CD inside of MyGen, or Myriad Genetics, not MyGen, Myriad Genetics. What the heck am I talking about? Well, I'll tell you what I'm talking about. I'm talking about a price projection of 49.38, maybe 55.40. I wish you had gotten in on a, at a lower price up against support or something along those lines. But look, let's just end it like this. As long as price closes over 37.30 by tomorrow at 4 p.m., you're going to have a confirmed breakout, a confirmed A to B equals CD, and it looks good. I don't know why you're just targeting 43 when you've got 49 or 55 written all over it. And that was for KJ, even if it was KJ Choi. Let's go we've got another question out here from CR. And CR wants to know, could you look at STM? They have earnings coming out next week. Well, let's first go figure out what STM is, and we will go take a look at it. We'll look at it. I'm always punching it up on my other charting system just in case something else pops out. But we're starting here with the normal look, which is, hey, what's it doing with regard to those market profiles? Above the daily, above the weekly, above the monthly, and you have a brand new monthly. Holy Toledo. How is this working? I've not seen this. Give me another ticker symbol. You've got 3 in a row with brand new profiles. This one formed above the new profile. It's a bullish outcome. It's a bullish event that you want to celebrate. If we take a look at what it's doing on a weekly basis, it is contending with taking out the swing point from November the 6th. Just a few short weeks ago, couple months, 26.1 million shares, light volume. Light volume as we speak. You're at 8888,680. I think that is good luck in China. And don't they have the Chinese New Year? When does that start? I think it's this week. Maybe it doesn't care if it's with light volume, but it looks pretty good. Your question was they've got earnings coming out next week. So I don't know what the question is there. If it is, hey, Steve-O, where would this thing fall back to? Where would this thing fall back to? That's a different question. You know, could fall back to 23 bucks. I'll take a quick peek during the break. But look, folks, get in on the action. Let those fingers do the walking. Steve at TFNN.com. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Apparently jumping the gun there, folks. The Chinese New Year is not taking place till February 15th. What was I thinking? Well, I was thinking actually that it was this week. I don't remember why, but actually I kind of do, and I'm just not going to admit to it. In any event, with regard to ticker symbol STM, this one is for CR out there. I would say that price, if we were to pull back, you look at support for 23.83. When you do let your fingers do the walking, maybe just expound just a little bit more. What you're looking at. Are you long? Are you short? You're trying to get in? Trying to get out? Just any of those things, so that I can assist you with that out there. But that's what I would be looking at. If you need more information on that, just go ahead and write back in. We've got another request. If we could go take a look at Boeing. So let's go fly away with Boeing. Ticker symbol there is BA. It's backing off a bit today. This thing has been on fire, just having an inside day, so to speak. What do we mean by an inside day? An inside day is where the current session trades within the prior session, and that is exactly what it is that we have going right now. The typical meaning, the traditional meaning, the normal meaning, the meaning is that the existing trend will continue. That is what those inside days mean. Does it work 100% of the time? Nah, it doesn't. But it works such a high percent of the time. And if you want to know what it means, because the news media is going to be, hey, Boeing is backing up and is the one that's really hurting the Dow out there. Okay, it's got an inside day. They don't tell you that. You got to tell folks the whole story. Volume today so far, not a big deal. 6.6 million shares. Yesterday up with 9.6 million shares. Similar, maybe a little higher volume than yesterday. Where is this thing headed to? Yeah, this is a parabolic move for sure. But that doesn't mean that it doesn't have more parabolic to it. It's just that simple. But it's a huge, I do mean it is a huge move to the upside. You wanted me to take a look at it. I don't really know. He says during the last year, Boeing has represented 1,050 points of the Dow. Oh, that's pretty cool. It's probably going to represent in the next year another 1,050 points inside of the Dow. And you might say, what? Well, that leads us to the request that came in that says, Steve, this is my day off. I'm paraphrasing now because my phone is off. But basically, this is my day off. I've listened to your show. You mentioned some historical reference with regard to the Dow and why you have a forecast of the Dow headed to the 30,000 area. I've never been able to see it because I'm at work. Would you be kind enough to go over that? So the answer is yes. So let's go over that. It kind of leads us, from Boeing. That was my segue. So thank you, Danny. How did you know that was the segue? Actually, I didn't even know till the question came in. So let's go do the old segue out there into the Dow. So I'm just going to switch to a different workspace and pull up some charts, make it a little bit easier, and just simply try to walk you through it. So here's what I have been referring to, and we'll just simply start right back here. It's a historical chart that I've built for the Dow. It goes back into the 1923-24 time frame out here. And as we take a look at it, first of all, on the very right-hand side of the chart, what you're going to notice is it's not on your normal scale. This is a logarithmic scale out there. You can look it up and get a feel. It's great as a tool to take a look versus a linear scale out here. Great to take a look at it as a tool, especially when it does so well at providing us meaning. Now, if we take a look at the top in 1929, we just simply run a trend line to the top, in essence, in, when was this, 1960? 67. This was 1966 to be exact. You'll see a nice little blue diagonal line. Interestingly enough, you'll notice that big red candle. The year was 1987 out there, and price came right down to support. You know how these lines work as support or resistance? Well, that came down and tested support, and that was the indication or confirmation that the Dow had entered a new phase. It just went in basically to a new level of heights out there. Now, the interesting thing here is we can take that exact same, did I say exact same? We can take that exact same trend line and we can apply it to the top in 2000. That's where my cursor is right now, versus the top in 2007. And what you can see here is back in, when was it? In, I'll give you the month. I'll give you the month out here. Back in, geez, I was going to try to give you the month. I still will give you the month. I think it was January 2000. No, January. It was November 2016. November 2016, when price broke above that level, it said we may have entered a new stellar constellation, a new level. Okay, and in fact, that becomes support. If there's going to be some type of move lower, what your eyes will really want to be sealed on is that trend line on a logarithmic basis to see if, in fact, price would hold. So that is step number one out there. Now, what the during now, if well, that's step number one. Let's go take a look at what's step number two. And step number two is, well, here, I'm just going to go ahead and, in essence, take that same chart and just not so smushed and take a look at it on a yearly basis. So you can see those same trend lines out there, and you can see that we are above it. So that is called a level of support on anything that moves lower. Is there any possibility that the market would move lower? And the absolute answer is yes. Now, we can say that for a number of factors out here. Will it? I don't know. If it does happen, will the outcome of the Dow going to at least 30,740 be off the table? The answer will be no. The only way that is ever off the table, and I mean ever. Did I say ever? I mean not Mount Everest. I mean ever off the table is price has to get below that logarithmic line and stay below there. Otherwise, that's where the Dow is headed to at a minimum. We're not even talking the 50,000 mark or the 60,000. We're just talking something as simple as 30,740. And yes, we've been talking about 30,000 plus since the Dow got to 20,000. We're at 26 now, so closer to the 30,000 than we were at the 20,000. Look, back in 1924, the Dow made an interesting pattern out here. It made a new all-time high, and that was back in, I believe, this is a weekly chart around the week of September 10th, 1926. Market moves lower, makes a nice little low out there. Market retraces up. Doesn't make a higher high. It makes a lower high. But on the ensuing move lower, it makes a higher low, I should say. A higher low. I got it written in front of me. I just have to read it, right? I've done the work. So that's an interesting pattern. Normally we call that the beginning of an A to B equals CD, right? That's what you and I look at all the time. We look at that lightning bolt pattern. But when the Dow breaks above or closes above that new all-time high out here, what it can signal is just simply a huge breakout and run to the upside. Does it always happen? No, but it sure indicates that that's a possibility. Are we in a similar style type of market now inside the Dow where we see this vertical market like we did back in the 1920s? The answer is absolutely positively yes. And during that time period, okay, there were several retracements between the 24 or really 27 timeframe and the top in 1929. Many retracement, some of 9%, 12%, 13%. So you can have those. Again, 10% is 2,600 points right now. You want to? I can tell you the people lined up telling you that was it. It's over. Okay, I will not be one of those people. Instead, we just simply would be looking for the next place to go ahead and add to the position out there. That's the beginning. When we come back, we'll go ahead and fill in the middle. We'll go see if there's any other requests out there. And, we'll wrap up the show in the not-too-distant future. But, hey, here at TFNN, we got programming going all the time. Your favorite polar bear and mine, he's going to be up in a little bit. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So it was JC that wrote in to ask that question. So let's finish this off for you, JC, and glad that you're having a day off from work. Maybe you live in Atlanta where it's kind of closed down, I think. But we talked about the pattern. We showed you that pattern that existed back in 1924. The interesting thing here with the Dow is that it formed the exact same pattern. The actual breakout took place in July of 2016 from that exact same pattern. Now, what we can do here is we just simply take the very low of that pattern, 15,370, and we have a price projection equal to or greater. So when I give you the figure of 30,740, which you've written down on a pad of paper out there, that's the Dow's target. That doesn't mean that's where price is going to stop. That just simply is its target. Once it gets there, or before it gets there, you and I will go through and we'll come up with some newer targets out there. But that's where it's headed to. And as long as price stays above that green line, which is probably right now about 18.7 or 8, maybe 19, you know, I'll like to take it back. Right this very second, it'd be about 18,000. Yeah. I'm not anticipating that that's what we're going to see as a pullback there. But that's a pretty big pullback, you'd have to admit. Even I would admit that. As long as price stays above that green line, it's headed for the 30,740 area. So that's how we take a look at history. And you don't have to believe it. You can say, Steve-O, you are full of a lot of great information. You just simply decide how to use it. You can ignore it. That's fine. You can tell me why this is wrong, and many people do out there. And that's why we have a market. That's why we have a buyer and a seller, a bull and a bear. Now, in order to be a bull out there, what you'd really like to see is you'd really like to see the topping pattern that's associated with every bear market. And that's where price moves higher, it does with less relative energy. Here it did it back in 2000. It did it in 2007. If we update this is a live chart, trade down to 26,010. We look at the monthly chart. Do we have that pattern in play right now? Absolutely, positively not. If there was going to be some type of pullback, wouldn't it be beautiful if it was? You'd like to see price move all the way back to support, which is 23,572. So the signs of a top are nowhere near. The signs of a major bottom, they're all over the place. And they've got that projection of 30,740. Now, do you really think that the other markets are going to take off to the downside and the Dow is going to just move higher? Now, whether Boeing's going to make up another 1,050 points or not, I don't know, but it's probably going to make up a bunch. There's no reason for it not to. All right, so that's that. We've got another request that did come in, and I think we've got a couple of them. One was from, let's see here, from Star Wireless. Good afternoon, Steve. Thanks for your response. It did get yesterday some calls, 185 and looking to exit. Is Star Wireless, is that the actual, that's the actual, let's see. You want me to look at Facebook. Is it Facebook? Let me just come out here. I'm not sure. Let me see here. I might have to read like the back message on that. That's not easy. Yeah. Okay. Facebook. Yeah. So it's about. So thanks for my response yesterday. To get yesterday some calls. February 185. And looking for an exit. Please analyze. Well, if we take a look at Facebook, one thing that it needs to do is it needs to clear the top of it. Also has a brand new monthly profile. And I don't know if we talked about that or looked at it yesterday. I hope that we did. But you really need to see this close above 184.25. If it does that, that's a level of resistance. And then as far as where would price head to, it would be headed for the 229.50 level. But this doesn't tell me by when. And and we'll do it by February 19th. No. So 180 February 19th. 2019. Got it. Okay. It doesn't tell me the time frame, but what you need to see in your next move here is a close above resistance, which is 185 and 184.25 out there. From a daily perspective, what do we have going on inside of Facebook? Inside of Facebook out here, well, this gap to the downside, that's a little bit of a problem. That's from the trading day of January 12th. I don't remember looking at Facebook yesterday when this thing moved down was $77. Let me switch to a different worksheet and see if I can put up the Facebook chart, see what it's doing on a daily basis. Just try to get just a tad better read on it as we pull this up here. And on a daily perspective, this really needs to close above the 182-ish area. 182.77 is the print on my screen right now. If it doesn't do that, what does it mean? Well, I think we just have to go back and measure the swing point that it's trading into. And that's going to be the price point of December 26. The volume there is 8.8 million shares. We know that's a holiday and light volume trading, 8.8 million shares, and it came back here recently with 27 million shares. So I don't know how you really benchmark that. I think what you do is you just move over to a full day's worth of trading, and that's going to be December 5th. So on the downside, what you want to see this do, it tested the top of December 5th. That had 20 million shares, and it was tested with 27 million shares. So the work to the downside may not be over. In order for this thing to start catapulting to the upside, we need to confirm that there are no more sellers. And the easiest way to do that is to test a swing point and do it with light volume. What you and I never know is at the top or the bottom of the swing point. Well, the top is 175.38, and the bottom is 169.01. So that's what you are looking for as to what Facebook is doing at the present time. So best of luck with that trade out there. I see a question to go take a look at. We did Boeing. To go take a look at the bonds. Well, let's go take a look at the bonds. ZB out here, if we take a look at March T-bond futures, my read on T-bond futures is bearish. And it's bearish for the following reason at this stage of the game. Slightly bearish. It's bearish because we have a falling price oscillator. That's the bottom panel. That's the difference between the 19 and 39-day exponential moving average. And because we've seen price move up and test Stevie's red line and reject it. It did not like that. And when it doesn't like that, it tells us we still have a falling price oscillator below zero. However, this is where the bulls and the bears are fighting. And they're fighting over a candle session from about 4 days ago. The exact date on this is the trading session of January 10th. That is a hammer candle. Means the market is trying to hammer out a bottom. And it was trying to hammer out a bottom as it was dealing with the swing point from October 27th out here. So that is really your level of support, or a level of support. And Danny, I would say that if in fact you see a close below that hammer, that's going to be at 149. We'll just call it 149 even out here. Then what you should anticipate is move down to 146.59. Right now what we have is we've got a prize fight going on between the bulls and the bears. As far as what round we are in, I don't know. I just know that you've got the bulls duking it out with that hammer candle and the bears duking it out with Stevie's red line. Which one is going to win? Well, the only way we'll know that, and it'll be by unanimous decision, As you see it close below that hammer candle, it is the Bears that won. You see it close over Stevie's red line. We have more rounds to go, but says that the Bulls are doing what they can, and they might have thrown a pretty good left hook, maybe even an uppercut. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. I like that Power Trading Hour, so definitely stay tuned for that. You got the Dow off 99 buckaroonies. S&P is down 4. So we haven't seen really much movement in the market since we came on the air out here. I don't see any other requests, so we've and look, thank you for taking the time to write. It always makes the show go by so much easier, whether it's a call, which I love to hear, whether it is letting your fingers do the walking, whether it's a request inside the Tiger's Den. It's just way better. It's way easier to do a show. They just simply fly by, and plus I'm providing information that is specific to you, and that's really what this hour is all about. Speaking about specific to you, many of you know I have been fighting a fairly nasty hamstring tear. There's 3 different levels. I was kind of at level, not kind of, was at a level 2 tear out there, and was basically have been kind of debilitated for the last couple of weeks. I walk, but it has not been, or had not been, without really major pain out there. So I had to do a lot of that adult beverage and medication stuff, kind of late or early in the evening. Even that wasn't totally taken. Hey, let me get on track here. So 2 days ago, one of the I think I'd share with you. I'm using a massage therapist who uses Rolfing techniques out there. And Rolf, for folks, if you've never tried it and you have one in your area, it's the absolute best type of, especially if you're athletic at all, best type of massage possible. But anyways, after our fourth treatment out there and things weren't improving too much, he suggested a place where I could go try to get some cold laser treatment. Yeah, cold laser. You can go ahead and search for it. And I did that a couple of days ago. And I did it again yesterday. And I've got to tell you, it is the most amazing. Google Dr. Oz cold laser. All right. So then you'll get somebody with some credibility, because I got no credibility out there. But if you got some aches and pains out there, your neck, your shoulders, your thighs, I'm telling you, it's not a miracle. I'm not doing backflips. But compared to what I was doing, I am doing backflips. Folks, stay tuned. David White's up next, your favorite polar bear. You got Tom O'Brien, 3 to 5, Andy Heck, 5 to 6. I'll be back with you on Freaky Friday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.